All right, traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. All right, so shout out to our folks in the Simpler Essentials room. All right, so let's get to it, gang. As always, we're going to take a quick look at the market. About 30 minutes before it opens, take a look at what's on the economic calendar, what's in our way, what could present some opportunities, and what everything looks like pre-market. So kicking it off with the economic calendar that you should see there on your screen. And let's see here. I was trying to see if I can get the webcam on in the Essentials room. I know you folks on YouTube have that already. All right. I won't mess with it. Let's get to it. Yeah, happy Friday the 13th. Yeah, I don't know. Anyone, what's it called? Trichotillomania? Trichotillophobics. Those are people who don't want to walk under black cats. So it's a terrible affliction. All right, so let's get to it. We have 9 a.m. So right about now. Let me get our clock on the screen here. There we go. So right about now, we've got Lagarde, we've got Harker, both speaking. So if you see action right into this particular time, treasuries, currencies, specifically the 6E Euro futures, obviously the indices, we'll take a look at those in just a moment. So this is pre-market. What is it that Harker is going to say? What is it that Lagarde's going to say that could put yields up or down, the dollar up or down? Obviously indices. So we can get a good look at those. All of those, of course, can be measured by futures contracts. And because they are futures contracts, they're nearly 24 hours in nature, about 23 hours. And while I do not recommend new traders start with futures, look, it's like handing the car keys to the Ferrari to a brand new driver. Right? There's nothing wrong with the Ferrari. There's nothing wrong with futures. The issue is, can you handle the leverage? Can you handle the speed? So this is where we start with something a little bit slower. I usually recommend, and not even micros. I know some folks might say, oh, Raghee, use micros. I actually don't like them. I know. Shh, don't tell anybody. Just us. I prefer most traders start with ETF options. Now, if you're already trading the SPX and things of that nature, you already get where I'm coming from. You can still benefit from leverage. You can still benefit from liquidity. And what I like about, say, trading, however, the SPY for new S&P traders who eventually might want to trade SPX or might want to trade the ES, what I would say is start there, something a little slower, less expensive. Use those as trading wheels, if you will. Some folks say, Rob, I never want to stop trading SPY. I still look at SPY on a daily basis. And while some traders will buy, as I like to say, 2 contracts, traders like myself and other larger accounts in the mastery might buy 22 or 42 contracts. It's just that liquid. All right. So anyways, that's what we've got going on pre-market. That is what's going on with our economic calendar. And here we go. Let's take a look at what the response has been from Harker, from Lagarde, as we take a look at what's going on in the S&P. So what was up until about 6:30, 7 a.m. Gang, if you've never done this, let me show you a couple of things you can do. All right. Especially when you're waking up in the morning saying, what has happened? do yourself a favor, drop a vertical line or just take a look at the price action from 3 a.m. Eastern forward. That's the London Open. Drop another line, and this is one that one of my mentors taught me. First cup of coffee in New York, 7 a.m. Take a look at what happens after 7. It's really interesting. At that time of day, there is oftentimes going to be a shift because what we've got is this odd doldrum period for 3 hours where Europe's open, the UK's open, and then at 4 a.m. Eastern, Asia closes. So for about 3 hours, you've got the European and UK markets open, Asia closed, and just anticipating the US open or when the US activity gets going. So keep it on at 7 o'clock and you'll see that sentiment, momentum, and ultimately now trend has shifted. That's the S&P. Are the other indices benefiting from that same shift? Absolutely. You can see there the Dow. And lastly, here is the NAS. So you can see it down, 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 down. 7 a.m., we went from the red trend that dominated the 90 minutes prior to that first cup of coffee in New York. 7 a.m. goes neutral. And now I would say largely, and thanks to whatever it is that Lagarde and or Harker have said. Notice I don't care what they're saying. I'm not glued to their words. I do know when they're speaking, and I know what, generally speaking, the different market that they will affect will be, right? If you want a really easy assessment, bonds, euro, S&P, right? And you'll get a good idea. Speaking of bonds, euro, and S&P, let's go take a look at the ZB. We had the 30-year auction, the long bond auction yesterday. Take a peek. Bonds are absolutely on another planet right now. One day extremely up, one day extremely down. If nothing else shows us the overall uncertainty about rates, not whether or not the Federal Reserve is going to hike again, probably not, right? That's not super discounted in any meaningful way in the Fed fund futures. So we're going to likely escape 2023 without another quarter point hike. The question now is that bonds are sort of asking Jerome is, are you really going to keep rates up this high until the July meeting of 2024? Are you going to bring that thing in earlier to maybe May, right? March, May was once upon a time where we were expecting the first cuts, moved out to July. Bonds are clearly telling the Fed with the downtrend that's there, despite the up day, there's an overall downtrend on the daily chart of bonds that we think you're keeping rates too high for too long. So we'll see how that goes. But right now, intraday, a lot of strength. And by the way, that had nothing to, this had nothing to do with Lagarde or Harker. This market has been moving in a bullish way since, well, you can say the heart of the Asian session. This is about 4 hours into the Asian session, 3-4 hours, moving higher, 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 up in the European Open, for the most part, up shortly after the UK Open. 7 a.m. first cup of coffee, no problem. So this has nothing to do with Harker and Lagarde. This is just today, bonds are up. All right, what about the euro and the dollar? This is the same conversation. This is 58% of the US dollar basket. That's what's happening here on the 6E. So if I take a look at what's happening on 6E, big sell-off in euro, big move higher in the dollar, and you have here now a pause, what could be a minor low. But nonetheless, weakness, weakness, weakness. First cup of coffee, still weakness. 8 a.m., this is when the euro decided to no longer be in a downtrend. What do we take from this? Look, gang, I don't know that I want to be trading the euro or the long bond, but if I've got some decent clarity, which it looks like we're going to inherit this morning, this is where I want to focus. Let's look for strength and some opportunities to buy into support in the indices. Okay, so let's get to it. Let's get to our questions here. Good morning, good morning, good morning. Okay, let's see what we've got. Good morning. Can I elaborate on the IWM drop yesterday? Can I elaborate on it? I don't quite know what. Well, yesterday was yesterday, right, Sadiq? It sold off. I mean, I'm not quite sure what the question is. It sold off. The Russell is in a downtrend, right? That's number one of all the indices. Those indices that have heavy weighting in banks. So regional banks for the Russell, big banks for the Dow, both of those are in downtrends. So, frankly, sell-offs for the Russell, sell-offs for the Dow are in the path of least resistance, or I should say the path of least support. Those are two of your weaker indices. Sell-off days in the Russell are probably the least surprising of any of the four because of the overall downtrend in that index. All right, next up, Jim asks, I've noticed the ETH multi-trend can show a slightly different structure from the, so a little inside baseball here. There's a multi-trend tool, gang, that I use on my chart, and it studies 4 moving averages and the relationship to each other to understand momentum and trend. I like to use the extended hours, so ETH. I do not like to use real trading hours, and that's for 2 reasons. And yes, absolutely, they're gonna have different reads, Jim, because real trading hours have a big old hole in data. The reason I like extended hours, especially for day trading, is really simple. For futures, gang, it's not extended at all, right? There's no such thing as extended hours for futures, not really anymore. It's nearly 23 hours. So why would I truncate them to 9:30 to 4? But for stocks, you might say, well, Rog, what's the point of having the pre-market built into what's happening on, say, Apple? Because the bell doesn't ring, Rod, for 7 minutes. Why have the pre-market? Think of it this way. Every one of our indicators, not everyone, there's 2 indicators that are not this way. Volume, depending on where you anchor it, for example, like a VWAP or volume profile, depending on where it's anchored, and HPMRs for sure. These 2 are going to continue to plot however they would plot, right, based on the data that they have. But where they are is going to be really no different. So, for example, if I have a 200 period moving average, I need 200 periods, 200 candles, whatever the time frame may be, to plot the thing. So if I'm removing a huge chunk of time, it's going to start counting differently than if I kept the extended hours open. So it goes to say, it's just more information, different information is going to obviously yield a different result, right? That makes sense. The second thing I like about having, even on things like Apple or Meta or Amazon, the other reason I like having the pre-market is I don't want my indicators to start calculating at 9:30. I want a running start. So what do I give more weight to? I do not use real trade or the regular trading hours. I use the extended always on everything, Jim. And it's really not even extended on futures. Like I said, for stocks, that's going to be your big difference. But I do absolutely, as you can see here, keep it on. All right. So thank you. Great question. So I think a lot of folks do ask, Rock, why do we keep that sort of odd illiquid time on our chart? Again, if I start everything at 9:30, that means everything's getting open, high, low, close, and it's going to start calculating from the 4 o'clock close to 9:30. And frankly, I like to have what's been happening pre-market, especially from 7 o'clock on in there. So no, it's a preference. Yeah. So Jim, great question. Good stuff. All right. Are we in sell the rip mode on the NASDAQ? Depends on the time frame. Dr. Watkins. Depends on the time frame, right? NASDAQ is a lot of different views, right? It could be a day trading view, it could be a short-term swing trading view, it could be a longer-term view. On none of those am I in sell the rip, though, for me, right? For me. Yeah, no. In fact, NASDAQ, if you've been tuning into Charts and Coffee, NASDAQ is the index that's most poised to benefit from Q4, if you want to call it sector rotation, bottom picking season, whatever it is. It's the strongest of the Russell Dow S&P. The strongest sectors that are heavily weighted in the indices are still NASDAQ or tech. Not consumer discretionary, but communications and tech most definitely are. All right, next up is, what about earnings? I hate earnings season, gang. I will tell you, it's if you've been a trader for a long time, and I know a lot of you have, I'm not the only salty dog in this room, but if you remember, once upon a time, earnings weren't even something that was discussed. You got a little envelope in the mail, and you were told what the earnings were. And that was it. It wasn't this thing that moved the market all over the place. Now it is. For better or for worse, it's a big volatility event. So we deal with what we have. Um, Whenever we have earnings, I look at it in the same light, especially with high concentration weighted earnings. I look at it, for example, JP Morgan. What's JP Morgan going to affect? XLF, number 2 weighted stock. This is where high concentration weighting is always going to be so important to know. If JP Morgan is today, then I know XLF is going to be in play, being the number 2 weighted stock in it. Then I've got BlackRock, Citi, PNC, and Wells all today. XLF is going to be in play. Does XLF affect the NASDAQ? Nope. Does it affect the S&P, second heaviest weighted sector? Where are financials going to land the heaviest? Of course, in those stocks, and of course in the XLF, but also most predominantly in the Dow. The Dow's number 1 weighted sector is XLF, it's financials. So as long as we know where it's going to land, now we can see here United Health. We've got Johnson & Johnson next week. That's XLV. XLV is going to influence S&P and it's going to influence the Dow, and it's going to have next to no influence on the NASDAQ. So as long as you're absolutely correct, something to watch, but as long as we know where we're watching it, as long as we know where to focus, we'll be fine. And if you want to know how I prefer to trade earnings, if at all, it's actually not the earnings release itself. It's and give me one moment, I'll show you where to go. It's not the earnings release itself, it's the weeks leading up into earnings. So if you go to the all-knowing, all-seeing Google, type in 642 earnings window, right? I don't even know if you could type in Raghee earnings window. I think 642 is probably, there we go. There it is, right? Check that out. The Trish Boss has done a great job with multiple updates about earnings season, what I'm looking at, what my window of opportunity is. And I'll tell you what, it's not the week of, definitely not the day of. It's going out usually 4 to 6 weeks before and trying to find those names that are already in trending mode and play the trend in front of earnings. That's some of the cleanest, more predictable action versus the very binary, we're very right or we're very wrong earnings type trading. So I like the run up. I like the weeks in front of, and all the details as far as what I'm looking for is absolutely in that update. Everything that I would consider, which I don't really like to do all that often, because I'm going to be looking at trending markets anyways. That's going to always be what I'm going to prioritize. And then when I add in, and it's going into earnings, it just gives me another reason to maybe make that a priority to look for opportunities in. All right. GJ asks, I want to keep compounding my account size. Do I think an account size of 200,000 or more could work well with tickers? I am constantly trading in the day trading. Oh gosh, GJ, I would tell you to start with about 10% of that. Start with 20. Start with 10% of that, right? And earn your size. I'll give you a quick story. I'm out of time. I'll give you a quick story. I used to have a trading office. I was partners in a trading office many years ago. And for whatever reason, a retired basketball player decided he wanted to day trade. And somehow or other, he knew my partner. And he came up to the office and said, I want to learn how to day trade the S&P. And this is when the minis were brand new. So this is circa 2000, 2001. And so my partner said, well, you got to sit down with Raghee. She's our best S&P trader here. So he sat down with me. And he's an NBA player. Yes, he's a multi-millionaire. So I remember telling him, I said, you're going to trade 2 contracts. He said, 2? Not 200? This guy could trade 200. He could trade 500. It does, he had a lot of money in his account. And I said, no, you're going to trade 2. Because if you trade 2 well, we'll trade 4. And if you trade 4 well, we'll get to 8. And so he earned his size. Now, at some point, yeah, he was slinging hundreds of contracts. But even him, I said, look, I know you've got the money, right? I know you've got the competitive spirit. Very smart guy. I think he spoke 4 different languages. But we started off with 2 contracts. He might have talked me into starting with 4. I don't remember. But whatever you've got, start small. Prove to yourself that the process is going to work. And then, if you got the capital, clearly, GJ, then do it. right? But I'll always say start small, earn your size. I do the same thing, right? That's what I was taught. That's what I recommend. So if there's something new I'm going to start doing, I'm going to start small. Even though I've been trading for 30 plus years, if there's some brand new market, I'm going to start small. All right. Okay, gang. Thank you as always for being here for Charts and Coffee. Be good to each other. I'll see you on Sunday for Top Tier Outlook at 6 p.m. Eastern. In the meanwhile, manage your risk. Be sure your position size. Let the market do all the heavy lifting. And the best thing we can do, gang, is try to find those trends. We're going to take a look at the indices this morning. I'll talk with you soon.